For years, we've been told that institutional adoption is the final frontier, the thing that would take Bitcoin and crypto mainstream. The ETFs, the hedge funds, the pension money, it was all supposed to be bullish. But what if I told you that was all a lie? What if institutions aren't here to build crypto, but to take it from us, to extract value, not create it, to control, not empower? At DAS 2025, or the Digital Asset Summit, some of the biggest names in crypto just confirmed our worst fears. And as the dust settles, we're left with one major question. Are we witnessing the beginning of mass adoption or the end of everything Bitcoin stood for? Guys, let's get into it. Let's start here with a clip from Meltem as she talks about the brutal takedown of institutional crypto narrative from DAS 2025.
This is the crypto market without Bitcoin and ETH. In the last 5 years, without Bitcoin and ETH, we've basically done absolutely nothing to grow market share or to grow traded volume. That is a problem.
Okay, now I just want to make this clear, guys. I don't agree that the industry has done nothing. So I don't agree with her point from a builder perspective, from a relevance of how we're growing as an industry. But she's making the point as far as where we are today. She's making a big picture point on how we are doing so far, as well as getting mass adoption on our own without TradFi stepping in. So let's continue to listen.
That is a big fucking problem. Look at it, that's the chart. Without Bitcoin and ETH, and it's really just Bitcoin, this is what we've done over the last 5 years. Hundreds of billions of dollars of venture capital, hundreds of billions of dollars funneled into new protocols, L1s, L2s, bridges, L3s, app chains. This is what we've done. The numbers don't lie. That's why I like data. And MicroStrategy, the ETF, everyone's so excited. Retail's gonna buy Bitcoin, yay! That's not what's happening. Who is buying MicroStrategy? Who's buying the ETF? MicroStrategy, now Strategy, it's ConvertArb. These people buying these assets, they're mercenaries. They're not missionaries. They don't have the same mission as us. They're here to make money. Okay, so let's run it down. Institutions, their position size based on their 13Fs, 1231 they were filed. Are they mercenaries or missionaries? If we look at MicroStrategy, Strategy Now, a lot of missionaries, because Saylor is Bitcoin Jesus, okay? He took the helm as Bitcoin Jesus, but a lot of mercenaries. If we look at IBIT, that's basis farming. The majority of large IBIT holders, it's not retail. It's not people who are long-term holders. They're people farming basis by going long the ETF and short Bitcoin.
Okay, we've talked about this recently. I will put a link in the description below, but watch it after this video if you want to, that describes what Meltem is talking about right here. We talked about it recently. This is literally the reason why we're seeing so much outflows, or we have been for the past few weeks in the ETFs, because of these outflows that Meltem is talking about. Okay, so let's break this down, and I'll give you Meltem's perspective. Remember, mine is slightly different, but what she's saying basically is that we were promised growth, innovation, decentralization, revolution. But the reality, without Bitcoin and Ethereum, this industry has gone nowhere. Let that sink in. Hundreds of billions in venture capital, 5 years, and the crypto market outside of Bitcoin and ETH is just flat. So what happened? Well, instead of building real innovation, TradFi stepped in and started taking instead of creating. And this is where it gets really interesting, because who are the biggest players today? Who's holding the ETFs? Who's running the money? We talked about it a lot of times before. It's Vanguard, it's BlackRock, Goldman Sachs, JP Morgan, the Rockefellers, all those guys who have always controlled the money, doing the same thing right now. These are not Bitcoin believers. They aren't here for self-custody, sound money, freedom, to give us individuals rights and financial freedom. No, they're mercenaries. They're here to extract value. That's their job. That's what they've always done, and that's what they will always continue to do. And Meltem calls it exactly what it is, the great extraction. But it gets worse because institutions only want to monetize Bitcoin to turn crypto into Wall Street 2.0. That's literally all I'm seeing right now. Every talk since Crypto America has come up and been about upgrading traditional financial systems. Everyone loves XRP. Oh, it's going to make cross-border TradFi payments better. Oh, Chainlink's going to connect all of the main banking blockchains that are centralized and CBDCs. What about the decentralized discussion? Well, the only thing that's really gotten credence and really a big, huge applaud and well-deserved has been Bitcoin. Totally decentralized. In the White House, they're calling it the Immaculate Conception. But in my opinion, and I'll get into it more at the end of the video, it takes a while it takes a while for anyone to first get Bitcoin and then understand what an altcoin is. Furthermore, to understand the value of how decentralization can be used in other ways besides money or store of value. And that's what we need for altcoin massive adoption. But that's just a little side. Let's get back into what Meltem is saying here.
Yeah, the institutions are here. That's what we kept saying. The institutions are coming, a wave of institutions. Oh, it's more of a trickle. The institutions are definitively here. Every single bank, every single asset manager in the United States of America and beyond has a crypto strategy. They're here, but they're here to take our money. So let's just get that straight. Tether, $97 billion of treasuries. They are the 18th largest holder of treasuries. They're a larger holder of treasuries than many G20 economies. So the US government should be much nicer to Paolo. They should be giving him medals. He's buying.
Paolo Ardoino, co-founder of Tether. And I think the US government is being nice to Paolo. But anyway, let's keep going.
He's buying treasuries. Not a lot of people want to bid right now. USDCs, 50 billion of treasuries, paying $100 million of fees. They're paying 20 bips to have a bank hold money market funds. That's a sweet gig. If I was an institution, I would love that. BUIDL, $1 billion of crypto natives. It's all crypto native money in BUIDL, giving money to BlackRock to manage. So we're literally taking liquidity and capital out of the system and shoving it into a bank and giving people paper IOUs and calling it crypto. Trump, 45th and 47th president of the United States of America. Between Trump, Melania, and World Liberty Financial, hundreds of millions of dollars of fees extracted, right? It's part of the revenues attributed to protocols. And between all of the insiders who are selling and profiting, including LA Vapequal and others, billions in profit, all taken out of the crypto market. This is not value additive. It's not a retail onboarding moment. Every asset manager and bank doing crypto is earning insane fees for putting things on chain. And putting things on chain here means holding treasuries, and in the case of Trump, selling retail crypto pipe dreams.
It's not easy to hear this, but it's the facts, right? It is what we've been seeing so far. And for someone like myself who loves the idea of decentralization, understands it, I guess deep down inside, I've always seen, especially there was in 2017, 2018, there was a whole narrative where people were saying blockchain, not Bitcoin. We don't really believe in Bitcoin, we believe in blockchain. And that was what all the institutions were trying to say, to adopt like digital asset technology or digital asset ledgers, but not decentralized assets that they couldn't control. Anyway, let's get back into it. So the things that we're seeing the attention on right now, especially coming out of America and the government, are not innovation, they're extraction. And at the very best, they're innovating using blockchain technology to innovate on the traditional financial system. Tether, USDC, the ETFs, they're all doing the exact same thing Wall Street has always done. Locking up capital, skimming fees, and keeping control. And here's the kicker. They're doing it even better than Wall Street. Unlike banks, these players do more than just profit from transactions. They're holding treasuries, minting stablecoins, and raking in billions, and I mean billions, a year in free yield. Guys, If you didn't catch what Meltem said and you don't understand how stable coins, let me just quickly fill you in. So I'm Tether. All I do is take your money because you want to get into the digital world from your fiat, from your US dollar world or whatever. So you give me $1 billion. I mint out of thin air $1 billion of USDT. I give it to you. You give me your $1 billion in cash. I put it in things like short-term treasury yields and I get 4-5% a year on that. Now I've got $100 billion in treasuries that I bought and I'm making $4 to $5 billion a year, zero risk. And that's it. Like, it's an unbelievable business model. Anyway, back to the story. And what about retail? Well, they're not getting a cut. They are exit liquidity. We were told that crypto would replace Wall Street, but instead, we just built, unfortunately, we're just building a better Wall Street. You guys know me though. I'm trying to break down that wall in Wall Street. That is entire ethos behind Commonwealth. And again, while we talk about this story today, it's inevitable what has been happening and what the intentions of the institutions are. But I do believe that products that are decentralized, that provide value, will one day receive a lot of attention. Just there's no one focusing on them right now. And if that were the whole story, we'd have a serious problem. But here's the thing. While institutions are taking from crypto, they're also doing something else, something that could change everything. Because whether they believe in Bitcoin or not, they're being forced to adopt it. And that's good for our bags. And that's where the biggest shift in history is happening right now. So it all sounds pretty depressing, right? And the question is there a light at the end of the tunnel? All right, so we know what's wrong, but is there anything actually going right? Because amidst all the skepticism, Digital Asset Summit 2025 delivered some of the most bullish announcements we've seen in years. We're talking about fundamental shifts that could reshape Bitcoin, stablecoins, and the future of money itself. Let's start with the biggest shocker of the conference, the US government's Bitcoin play. Bo Hines, the White House crypto advisor, dropped a bombshell. Let's check out this clip.
It's high time that our president started accumulating assets for the American people, which is what President Trump is doing, rather than taking it away. And I think that's one thing that we really wanted to make clear in this executive order. And we're looking forward to working with our partners at Treasury and Secretary of Commerce in order to find those budget neutral ways in which we can acquire more. You know, I've been asked all the time, it's like, how much do you want? And I said, well, that's like asking a country, how much gold do you want, right? I mean, as much as we can get.
Okay, so Bo's reaction there, I mean, it sounds good at face value, but at the end of the day, I was left wanting a little bit more. You know, how much Bitcoin does the US want? Well, as much as we can get. And then he also says, well, it's like saying how much gold does US want? As much as they can get. However, we know that over the past 50 years, the US hasn't accumulated as much gold as they possibly could get. They could have gotten much, much more. So I was a little bit disappointed with it, but I think you can look at it in a bullish way as well. I'm just looking for more concrete answers, and I guess they just don't have them yet. He talks about the budget neutral strategy that the US can use to acquire Bitcoin, and they're going to try to get as much as they possibly can. Now, they could have an amazing plan put together in order to do that. Let's just keep our fingers crossed and hope, because the second the US starts acquiring more Bitcoin and adding to the reserve, that's when things get very real. They go from, the US decided just to keep what it already had, not too exciting, to actively acquiring more using budget neutral strategies. All right, guys. Now this is Eric Peters. Let's take a listen to him.
What is the pitch now? What is crypto to these allocators?
Yeah, I think Bitcoin is digital gold for sure. I think I have always held the view that it is not only digital gold, but there is a embedded technology call option in there because it's the most secure network in human history, and people just haven't yet figured out how to build something on top of that. Really,
they're working on it. They are definitely working on it. And guys, this isn't just talk talk. Right now, the Bitcoin Reserve Act is on the table, a bill proposing that US Treasury acquire 1 million Bitcoin over the next 5 years. That's 80 billion plus allocation at today's prices. That would absolutely send Bitcoin to the moon. So why is this happening now? Because nations are realizing what we've been saying for years. Bitcoin is more than an investment. It's a geopolitical weapon. And when the US sneezes, other nations catch a cold. The virality will be like something we have never seen before. And Eric Peters, who is the CEO of Coinbase Asset Management, said it best. If the US goes down this path, other nations will have to take a stance. Over the next year, we could see sovereign wealth funds quietly accumulating Bitcoin. Guys, we already know that they already are. We know that the Abu Dhabi Sovereign Wealth Fund is acquiring Bitcoin. I've told you before, and guys, if you aren't subscribed to the channel, welcome. My name is Chasse. You should definitely be subscribed to the channel because we talk about everything that you need to know to stay completely on top of this market as crypto gains more adoption around the world, and to help you guys and educate you on your potential crypto investments. All right, guys. So if you're finding value so far, make sure that you hit the like button as well. Let's get back into it. And Rupert's here. Hi, buddy. Come on. Hello. Go buy Bitcoin. Hello. Go buy Bitcoin. Did you know that digital summit was kind of cool, but it's kind of bullshit too? The answer, just buy Bitcoin. Just buy Bitcoin. Just buy Bitcoin. Look. Show them your Bitcoin, Roops. Here we go. Mwah. Ready? Go, go, go. So we already know that they are quietly accumulating Bitcoin. But what is really meant to be said here is that it will be an aggressive accumulation of Bitcoin once the US makes it known that they are also aggressively accumulating. Once that first domino falls, holy moly, it's going to be insane. And if that happens, you can forget about ETF flows. We're talking about a level of demand that could push Bitcoin into 7 figures extremely fast, right? We could be talking about seeing numbers increase, and this will make maybe some of you uncomfortable, but mark my words, we will see a day. I don't know if it's in 2025, it could be 2026, maybe, but we will see a day where sometimes, or months, where we see Bitcoin increase 5, 10, 15, even $20,000 in one day as supply shock kicks in and every nation around the world is scrambling to scoop up Bitcoin and realize there's none left to buy. But until that exciting day, we need to deal with Wall Street 2.0. So during the summit, as that's the point of the video, is tokenization the next big narrative? Now, to me, this is kind of an interesting thing, only because I'd like to get into it with some of the things that we're building. But again, I'll save that for another day. For years, we've heard about tokenization, the idea that one day real world assets would move on chain, stocks, real estate, bonds, all digitized on blockchain. At DAS 2025, this wasn't just talk anymore. They're actively working to bring trillions of dollars on chain. Cathie Wood, one of the biggest institutional investors in crypto, dropped a huge announcement. She wants to tokenize ARK Invest $5 billion in assets. Why does this matter? Because ARK is not some small player. It is a firm that called Bitcoin at $500, Tesla at 40, and AI before it went mainstream. And now they're betting big on tokenization. And for the promises of tokenization, 24/7 market access. You can trade anytime, no middlemen, lower fees, cutting out Wall Street's gatekeepers, fractional ownership, making investments more accessible, and it's not just ARK. Blue Macarali of T. Rowe Price, a $1.6 trillion asset manager, says, no one is prepared for the unlock that happens when assets go on chain. I've talked about this relentlessly on this channel. Trillions and trillions and trillions of dollars will come on chain when real world assets goes live, or when the tokenization of everything, as Larry Fink calls it, goes live. And they're right, because when institutions tokenize their assets, it will rebuild the financial system from the ground up. Standard Chartered says the market for tokenized real world assets could hit $30 trillion by 2034. That's more than the entire US stock market today. Let me say that again. That is more than the entire US stock market today. But the real question is, who wins in this system? Because if you think this means more freedom for the average investor, think again. Tokenization could be a Trojan horse. Mark this down. When institutions embrace tokenization, it's not, and trust me, it is not about decentralization. It's about control. Right now, if you buy Bitcoin, you own it, as long as you hold it in your self-custody wallet. But if you buy tokenized assets inside a walled garden blockchain, meaning a centralized blockchain, now you're playing by their rules. And that is important to always remember in the game of crypto. Check where are your assets being transacted and where are they being stored, because those two things are extremely important, as at any point in time, if your assets touch a centralized blockchain or centralized asset custodian like Coinbase or others, you could lose your crypto because you give up ownership at that point to it. And who gets to control the rules? Well, the same institutions that crypto was supposed to replace. And let's not forget, the CBDCs, or central bank digital currency, push is built on the same technology. Now, we know Europe is gunning for this. We know that the Federal Reserve had trialed a program called FedNow. We know Brad Garlinghouse talks about the 10 different governments that he's working with to create central bank digital currencies. And we know that central bank digital currencies will run on the same technology that XRP Ledger runs on, and it is centralized and controlled. You must understand this. Now, I'm not here to say that that world shouldn't exist. It's fine that it does, but my job here is to educate you on the difference so that you can take ownership and responsibility and self-sovereignty of your own funds and your own freedom. I think that is the most important thing that crypto has invented so far, is Bitcoin, because as we know it, fiat is a dying breed. The US dollar, although being at the strongest currency in the world, will eventually one day lose its purchasing power, and physically printed US dollar bills will also go out of circulation, leaving only digital currency. And God forbid that whatever country you're in does not adopt central bank digital currencies. And if it does, at least you have an option to opt out of that, because Bitcoin was invented. So while tokenization could unlock trillions in new markets, it could also be the next step toward total financial surveillance, which brings us back to Cathie Wood's price targets. Cathie Wood's 1.48 million Bitcoin prediction, is she genius or is it fantasy? Cathie is ultra bullish, like me, perma bulls, because we understand. All you literally have to do, for those of you guys who are watching who are relatively new to the space, I talk about conviction all the time. It's the most important thing to making sure that you do not end up selling your Bitcoin to institutions at a price that you will undoubtedly later regret doing. She's predicting Bitcoin will hit 1.48 million per coin by 2030. That's a 20x from today's price, which is absolutely mind-blowing. But is she right? Let's break this down. Her thesis is simple. 1, institutions will allocate 5 to 6% of their portfolios to Bitcoin. Bitcoin will capture 20 to 50% of the gold market. Fiat devaluation will push Bitcoin to new highs. Sounds great, right? But here is a problem. And that last one, that number 3, actually, the fiat devaluation, is an interesting one, because what we're saying here is even if Bitcoin does go to $1 million, and let's say a Lamborghini costs $250,000, that doesn't necessarily mean that with one Bitcoin being valued at $1 million compared to the US dollar could buy you 4 Lamborghinis in the year 2030 or 2034, what it could mean potentially is that the US dollar has been inflated so much and debased so much that the dollar value compared to Bitcoin has gone down so much, and the purchasing power of Bitcoin has increased some. That is one thing to always consider when you understand when these numbers come in and we get crazy numbers. They're also based on the devaluation, the likely devaluation of the fiat currency system. So for Bitcoin to hit 1.48 million, it would need a bigger market cap than gold, massive institutional adoption beyond just ETFs, and no major government crackdowns. And history tells us that when a new financial system rises, old systems fight back. Bitcoin is winning battles, but the war isn't over. The big players, governments, central banks, Wall Street, they aren't just going to roll over, because when you control the money, you control the world. And this is the real question. Will Bitcoin thrive as an independent asset, or will it get swallowed up by institutions and turned into just another financial product? That's the fight playing out right now. And history tells us that when a new financial system rises, the old system fights back, or at very least, adapts to try to remain in control. Bitcoin is winning battles, but the war isn't over. The big players, governments, central banks, Wall Street, they're not just going to roll over and let us all just sort of libertarians run around with our free Bitcoin that they can't control. Remember the great quote from Mayer Rothschild: "Give me control of a nation's currency, and I care not who makes its laws." That was from the Rothschilds. And this is the same thing. In fact, I made a video probably 3 years ago in 2021. In fact, it was during COVID 2021 when I made this video. Maybe someone can link it in the description below. It's funny how time flies. That potentially the same families who control the current Federal Reserve maybe already control Bitcoin. We don't know. Because when you control the money supply, you control the world. And the real question, will Bitcoin thrive as an independent asset, or will it get swallowed up by institutions and turned into just another financial product? That is the fight that's playing out right now. In fact, there was a huge war in the Bitcoin community back in 2016, 17, 18, something called the block size wars. Really interesting. Let me know in the comments below if you would like me to make a video. And if Cathie Wood is right and Bitcoin is heading to $1.5 million, what you should be asking yourself isn't how high it can go, but who gets control of it. Because folks, I just want to stop for a second and talk about the significance of this. What you have to understand about the beautiful, immaculate conception Satoshi Nakamoto left us with Bitcoin is that it is public. It is that it is permissionless. It is that it's censorship resistant. It is that it is unconfiscatable. It is that it is immutable. And all of those things are what makes Bitcoin versus almost everything else in the world so special. And we have to always be aware of this. Is BlackRock, institutions, governments buying Bitcoin going to send the price of Bitcoin higher? And as long as we have our Bitcoin before that happens, well, isn't that a good thing for us? Yes, it's a good thing for our investments. But we must also be aware that there's a lot of speculation, and we cannot forget that these institutions are not our friends. They do want to continue to control the financial markets into the foreseeable future and literally beyond. So we must not forget our core principles. We must not forget where we've come from, and we must not forget about the significance of Bitcoin remaining public, remaining open, remaining censorship resistant, remaining decentralized. There is speculation that some of these major institutions like BlackRock and Vanguard and others may one day try to fork it and take control of it. So we must be aware of the consequences if that happens. So the question is, Are institutions a threat or an opportunity? So where does this leave us? The big lie about Bitcoin was that institutions would bring adoption and innovation. Instead, they're extracting fees, pushing financial products, and front-running retail. They are not missionaries. They are mercenaries. But at the same time, the US government is moving towards Bitcoin as a reserve asset. Stablecoins are being positioned as a weapon of financial dominance, and tokenization is unlocking a multi-trillion-dollar market. So what does this all mean? Is crypto still a revolution, or has it already been co-opted? That's the question we need to ask. But before we wrap this up, I want to leave you with something to think about. Because while we're all watching Bitcoin's price targets and institutional inflows, let's not forget what this was really about. Satoshi didn't launch Bitcoin so BlackRock could sell it back to you at a premium. He embedded a message in the very first block, the Genesis block. It said, quote, "Chancellor on the brink of second bailout for banks." A warning, a wake-up call. Bitcoin wasn't created to become Wall Street's next speculative asset. It was designed as an exit from their system, a tool for self-sovereignty, a way to opt out, a life raft. And yet, here we are. The same institutions that laughed at Bitcoin a decade ago now control the on-ramps. They don't care about decentralization. They don't care about censorship resistance. They don't care about profit. It's control. So while this next wave of adoption might send Bitcoin to 1 million or more, ask yourself, at what cost? Are we embracing Bitcoin's true potential, or are we letting it get absorbed into the very system it was meant to replace? Because the real power of Bitcoin isn't just the number going up, it's the freedom it represents. And that only works if you take control, if you hold your own keys, if you stay self-sovereign. Not your keys, not your crypto. Remember, institutions will do what they always do, take, but Bitcoin is yours only if you choose to keep it. And that is a big responsibility, but a privileged one. And that's it for today. Stay sharp, stay informed. I'll catch you guys on the next one. See ya.